Today on Expert Showcase, we go behind the episode with Curtis May, financial educator, talking about the fact that we can save money, decrease debt, and not even give up our latte at Starbucks.
Welcome to Behind the Episode. This is the part of the show that we talk to our most recent guest. Today is Curtis May, and we have our interviewer, Dr. Mark Kosman. How's it going, Dr. Mark?
Doing great.
Good. And we're going to have a nice little conversation and do a little content marketing talk. And I think that's all I got to say right now for this opening. So now that I made everybody laugh.
We need 6 more blocks, and then we'd have like the Brady Bunch thing going on.
That's right. We could do the Brady Bunch here. Absolutely.
Yeah, exactly. So take it away, Dr. Mark.
So, Curtis, here's what we're going to do. We're going to have a little chat about the episode that we just created, and then we're going to show folks that episode when we're done with our chat here. And in between that, we're going to have a little consultation, basically. What Chris is going to be doing is taking some notes. The audience can see the notes that he's taking up on screen. And so we're going to talk a little bit about your background and about how you create content and things like that. He's going to take those notes, and then we're going to flip it over to him, and he's going to give us some feedback and be our coach consultant and help us think more clearly about content. That said, Curtis, so love the episode we just did. People are going to get some great stuff when we show that in just a couple of moments here. How did you get into this whole world of financial education?
It's long story short, in the interest of time, but I actually started in college, and I was playing basketball. I realized the NBA wasn't looking for 5'11" shooting guards, and I initially got my insurance license, and then my Series 6 and 63 a few years later, and worked with the company doing that for about 10 or 15 years. And what happened was I made a kind of a transition. I stumbled into a book called Rich Dad Poor Dad, Become Your Own Banker, and I started to kind of my philosophy about what is conventional wisdom started to change over. Whereas now my nickname, I teach different places, and my nickname is becoming known in financial circles as the contrarian.
The contrarian. Well, yeah, because you have a very different perspective on money than the mainstream, right?
Yeah. And it's not for everybody. You have to, I tell people, look, if you don't want to think about your money and you just want to kind of set it and forget it, don't call me, because I'm not that guy. It's your money, and my goal for people is to help what I call raise their ceiling of complexity. When it comes to their money. So as your knowledge goes up, your anxiety comes down, and then you have more capacity to deal with, financial issues that they hit you. But it does require you to think, but that's more empowering, I think, for people.
So so you are a bit of a contrarian, and you're going about this a little differently. How do you try to define your audience? I mean, who do you find are the right people for your approach? I mean, in the language that Chris and I like to use all the time is, who's your ideal audience? Who's your ideal client that you're looking to work with?
Well, I like working with what I call middle America, people with household incomes probably at least $50,000-$60,000 a year and up, probably 50 to I'll take, obviously I'll take rich people.
You'll take a millionaire.
I'll take a millionaire, but if they're making between 50 and 150, 200,000, see, they're making money. They're still broke, okay? Right. And so, but they have cash flow, and we can help them. So I like that.
I can see that, yeah.
Because good financial planning is not investing. See, people think it's all about investing. Financial planning is 5 parts. It's helping families spend, save, invest, insure, and plan for financial independence. And I would argue that the investing is last. Most people need to save first. I teach people to save from income and invest from assets. So once you accumulate pools of capital, then you have to employ your capital in things that you understand that makes sense. It's not good stewardship to say, well, let me give the majority of my money to some fund manager, 1,000 miles away, and hope 30 years from now I'll have this big pool of money to live off of. I mean, that's what people do. It just isn't.
Absolutely. But you're doing a great service, Curtis, because I am always mystified at how ignorant we all are about money. I mean, it's you could almost go off on a conspiracy theory about the fact that perhaps the financial world wants to keep us willfully ignorant. But even basic stuff. I remember the light bulb that went off in my head when I realized that if I've got a credit card debt at 15%, and I'm trying to carry that debt while I'm also putting money into a savings account that's paying me 0.5%. What am I doing, right? I got to get rid of that debt because it's sucking me dry way faster than the savings account is going to pay me.
Well, but here's the
contrarian.
Contrarian. I think you should still pay yourself first because
Absolutely.
liquidity is key. So people, they'll say, well, I'm making less money. See, but this is what I mean by a transfer. So what happens is if you think of a debt, now there's good debt and bad debt, but let's say credit card debt. So if you look at a liability on your balance sheet, it's a liability, but on the bank's balance sheet, it's an asset.
Right, they're making money on it, right?
And so what's the first rule of wealth? This is my favorite book, The Richest Man in Babylon. Pay yourself first, right?
Okay.
So that means you've got to as Rich Dad says, mind your own business. So you've got to put money in your asset column. And so when you say, well, I'm going to pay my debt or I'm going to prepay my mortgage, what you're doing is you're bypassing your asset column to transfer your wealth directly to the bank's asset column.
Interesting. Okay.
And so that is, because what happens is in personal finance, they don't teach the concept of opportunity cost. And so opportunity cost is what the money would have made had you kept it in your investment.
Right, I see what you're saying, because obviously if I don't have the money, then I can't invest it in something else if I happen to have a great opportunity that was going to give me a great return or something like that, then I'm just
getting
out of
luck. Debt doesn't, it gets you out of debt, but getting out of debt doesn't create wealth for you. And so if you look at, I always tell people there's kind of two schools of thought when it comes to financial literacy. There's the traditional path, what they teach in personal finance, where they teach buy and hold, dollar cost average, get out of debt, buy term investor difference. But if you look at what affluent people do, or you take a corporate finance course, they teach the complete opposite. It's like a complete 180. They don't teach get out of debt. They teach velocity of money, right? And so that means if you put $10,000 in a deal, what do you want to know? How soon can I get my $10,000 back out so I can do what? Put it somewhere else. Right. And so where do you think they're getting the money to velocitize? By teaching you to buy and hold. And, if getting out of debt, well, if you've got $100,000 in cash, you got $100,000 in debt. Debt is when you have more liabilities than assets. And see, so if you can make your $100,000 cost more than the $100,000 of debt costs you, then it behooves you to not pay off the debt and just make your money make money for you. See, but it takes a little bit of a deeper understanding about money to do that. And so that's why you have to do a little work.
If I hear you right, your ideal audience, your ideal target is the people that are kind of fairly squarely in the middle class because they've got the income, but they also have a lot of those transfers you're talking about, which is where you could really help them plug up holes, really help them hold on to their money and be much wiser, and they really could see a big difference in their day-to-day life if they were able to do that, right? I mean, working with you.
Yes, I mean, they're getting big tax refunds. I think it's a great idea, but while they're waiting for this big tax refund, they're being charged overdraft fees, their money's all tied up, they're not making money with it, and then as soon as they get it, what do? They spend it. So you use control of it for a year, and then as soon as you get it, you transfer it away because you either pay bills with it or you spend it. And so now it's gone forever, and you can't use it to increase your wealth.
Right. All right. Well, I think what we're going to do is, in the interest of time, is flip this over to Chris. But as you know, we tend to really kind of be very problem focused in the content we create, and it sounds like you are a rich resource for that because you've got that target audience, you've got people who are losing a lot of income that way, and there are all these categories of how they could be, making a change and solving a problem that you could be that financial educator for. So Chris, I'm assuming you're hearing some of these same things. Let's flip it over to you and give us a little feedback about what you're hearing Curtis talk about, and if we were to really kind of create a content empire with Curtis, what would that look like?
Yeah, great question. So first of all, thanks again for being on the show today, Curtis. It was a great episode. It's very interesting that you talk about, books like Rich Dad, Poor Dad and The Richest Man in Babylon. It's kind of funny because if you're watching this video and you haven't read those two books, I would challenge you and invite you today to go out and start reading them both, because while I'm not a financial planner, I would hope, Curtis, you would agree that those are two foundational books that will change the way you look and think about money, period. So if you're struggling...
Oh, absolutely. I basically teach The Richest Man in Babylon. I mean, it's because it's about your philosophy, as Jim Rohn says. There's nothing to do with products or mutual funds. It's just about, when you get $1, there's only 4 things you can do with it: spend it, save it, invest, or to give it away. So the order in which you do that forms your financial philosophy, and that's what I try to work on with people.
Right, exactly. One of the things I loved that you talked about was that, and I'll shortcut it to say rich people think about money differently than the middle class does. And it's so true. I did have a couple questions for you. I know you got your free report. I know you do your consultation. And I know we didn't ask you, so it's kind of putting you on the spot a little bit, but what other content have you, at a high level, have you already created to support this, or have you created any other content around your offerings and webinars, that sort of thing?
Wake up at 3 o'clock in the morning and write it in my journal.
But how does that help me, Curtis? How does it help your audience?
Well, I know that's the problem. That's why we're doing. I said, look, I need to go through my journal and start to get this stuff out there. Record some, recording stuff. I try to. That's the problem. I don't share it effectively.
Okay.
Other than I do workshops, but I don't do what you're talking about. Like I just created as we record this, it's Black History Month, right? And so I just read this book called The Wealth Choice: The Success Secrets of African American Millionaires by Dr. Dennis Kimbrough, who I met last year. And so I said, I love this book. I need to just make some lessons out of this. So I recorded. I took the first chapter, 9 disciplines of Black millionaires, and I just pulled them out. I recorded it and made kind of added my own little commentary on it and put it out there. If you go to YouTube, it's out there. You go to the YouTube channel, you'll see it out there. That's the other night.
That's great. Yeah, that's
4 o'clock in the morning escapade.
That's great. Congratulations. As a fellow content producer, what I would also tell you real quick, and then I've got some suggestions based on what I heard that I believe will help you. Especially when you use other people's content like that, it's great. And as an author myself, I know I love when people contact me to say, "Hey, I've used your content. Is it okay?" And it always makes me feel good. Somebody says, "Hey, look, I had a paragraph from your latest book. I want to incorporate it into a workshop. Is that okay?" It makes you feel honored, regardless of how many books you've got out there. I know one of my mentors, John Maxwell, feels the same way. It's like a lot of people end up in some way, shape, or form using his material, and
right.
He loves it when people reach out. So I'd recommend and I invite you to reach out to to the author and just say, "Hey, I really loved your book so much that I wanted to kind of incorporate it, and here's what I did." Because the good news is if it goes so far as they say, "Hey, that's great. Can I support you? Can I endorse you?" Something like that. I mean, I've even heard of people having that happen. So a lot of people don't reach out to authors. So here's tip number 1 for content creators. When you're out there, if you watching this are a content creator and you decide to use somebody else's material and incorporate it in some way, reach out to them and let them know. There's very, very few people who create a content who are going to tell you no. But the majority will either say nothing or just say, "Thank you for telling me, that's cool." The rare occasion they'll tell you no. The other rare occasion, but it ends up being an incredible situation for you, is that they say, "Yes, can I endorse you?" Or I read it, I like the way you portray me. So can I write your quick recommendation, or can I write your a review? And then all of a sudden you've got this either review on YouTube or on your website from somebody from somebody famous. That's what we were talking about James Malinchak before. So if you ever use anything of James's stuff, reach out to him. You might want a commission, but
Now, Chris, that's a fabulous point, because I think almost nobody does it, or if they do that, they're just doing it for the permission's sake. But you're absolutely right. I mean, that person might turn around and say, "Hey, love what you did," and tweet it out to their followers or put it on their own social media, because of course now you're both promoting each other. Excellent point.
Exactly.
I think that's a good point, because I find that I read a lot of different stuff, and then it kind of rolls around my head, and I can distill it to the point where I can draw it to somebody on a napkin, and until I get this book everybody says is in me, out of me. There's so much other good content out there, because I like to say, oh, look, here is what you can do, and here is where I got it, because I want people to have a reference of where they can look up their information. There's nothing new under the sun, and I like promoting other people's stuff.
Excellent. Cool. So there was, and that's great. I'm glad to hear you say that. There's 5 things that really stuck out to me that I could see you creating content based on, because they either appeared to be a little bit of a different area or really resonated. So the first one, I wanted to ask you a quick question. You talked early about raising a ceiling. Was that the ceiling of complexity or of capacity? What you were talking about?
Complexity, meaning that they'll hit a ceiling where they just I don't know where to go because they just don't have the capacity, but it's like now in full disclosure, this is from an organization called Strategic Coach, where I heard a book by Dan Sullivan, and where I got that, because I found I've hit that wall, and people just, hey, I don't know what to do, and if you educate on their ability to deal with stuff increases, and that's what I feel that my calling is, what I do for a living.
Excellent. So what I would say is that's something that I don't hear anybody talking about. So I would invite you to create a 4-part content series on that. The second thing was good financial planning is not investing. It's a combination of other things. I think that the things you talked about there were great. I would invite you. That's a great overall title that you could very easily create a 4-part. I know there was 5 things in there, but I believe you could easily create a 4-part series on that. I love the concept of employing your money and making your money work for you. I think that also I know there are certain ways you can go about doing that. Liquidity is the key, and it's interesting that you talk about the difference in the way people, the difference in how people think about their money. So I think that talking about and sharing your thoughts and your learnings on why liquidity is the key. And probably mixing in a little bit of how the wealthy think versus the middle class. And then the final thing is really teaching people about opportunity cost and putting it in such a way that shows them, that while a lot of financial advisors will tell them to pay off debt first, and for some people that's a good thing, that depending on your situation and depending on the opportunities you might have in front of you, that you might be losing other opportunities because you decided to pay off the debt, so that there is a trade-off there. And in the end, I think the best thing you can hope for is to educate people on this and let them make their own decision. Educate them that say, look, okay, take a 4-part series and create this thing where you teach them and say, look, you have a choice between paying off the debt and what is it costing you, and then at least give them the opportunity to to pay it. So I think those were 5 things that I heard that at a high level, I think you could do a bullet point on and very easily create small 4-part series based on it. In kind of like the 1-4-3 IDAP method that we talk about, where you take a core problem, you've got 4 milestones from the untenable present to the fantastic future, and each of those milestones has 3 keys to success, 3 keys to get you from point A to point B to point C to point D.
Are you going to send me the notes on that, what you just said?
Hey, you know what? I'll tell you what we'll do, Curtis. We'll record it. So you can play it back and listen to it.
I'm thinking, all right, I should look at the camera. I really wasn't right. I was like, should I kind of write this down? Hold on.
No, so it's all been captured for you.
All right.
And the good news is this has all been recorded, and as of right now, I've got a little on the screen. If you're watching this at home, you're seeing it. But Curtis, you'll be able to see and actually stop and kind of make notes right on this particular area with the kind of the outlines there. So, Mark, I think that's from a from a financial standpoint, I think that's or from kind of an episode, I think that's what I've got right now. So I'll throw it back to you and Curtis to do a little more talking before I wrap us all up.
All right, cool. Well, Curtis, it's been great having you. I mean, in full disclosure to those who are watching the show, Curtis and I have known each other a long time, and I love talking to you because you are, a font of knowledge and are a contrarian and always kind of spark a different way of looking at things. but I think we could do this all day long, and we could be creating tons of content that way, and people would be benefiting, because right now you have a highly educated journal
Right.
that needs to be shared. So that said, glad to have you on the show. We are now going to show people the episode that we just created, where they can learn a little bit more about saving money, decreasing their debt without wrecking their lifestyle, because as you said, as you're about to tell people, we're Americans. We like to have
Right.
a little lifestyle.
That's right.
So without further ado, Chris, I think you should let people see what Curtis has to offer them.
Well, as per usual, there's a little more ado.
There is a little bit more.
There's a little more
That is
ado
true.
before the first.
I always forget that there's the go ahead.
so we shall
Listen to what he has to
before
say.
the further. So, first of all, if you want some great financial advice and want a great episode on key things about how to, make your lifestyle better without giving up your Starbucks latte, stick around and watch the brief episode that we just got done recording with Curtis. If you're a coach or consultant, and after seeing this or watching the episode, you realize that being featured on an episode of Expert Showcase would be a boon to your business and would help put you in light, help get you the visibility, the credibility, and set you up as the leading authority in your niche, then what I want you to do is go over to expertsshowcase.com, EXPERTS showcase.com. I figured I'd spell it out this time. Experts Showcase. Well, they got the double S thing in there. So go to expertsshowcase.com, click on that big apply button, and apply. And we'll get it. We'll look at it. And if you're a good fit, we'll get back to you, and we'll have you on the show. And if you're a coach or consultant, and you like the energy, and you like what you're seeing here, and you realize that having your own internet talk show is going to increase your business, and realize that it's going to allow you to create content easily, quickly, and month after month, and get that great content out to the world, and this is where you need to be going and what you need to be doing, then you need to go to VideoContent.Agency, go to the services tab, check out the services, our visibility package, our credibility package, and our authority package. And if you like what you see there, get in touch with us, and we'll see if we're a good fit for each other. And I think that's about it. So now, without further ado,
Curtis's episode. See, I jump the gun sometimes. So
I'll roll the tape.
today on Expert Showcase, financial educator Curtis May, and he's going to teach us that we can save money and decrease debt without having to give up our Starbucks latte. Curtis, welcome to Expert Showcase. Glad to have you on as today's expert guest talking about financial issues. But give me a quick rundown of more or less the focus of what we're going to talk about in this episode.
All right, Dr. Marquet, glad to be here. What we're going to talk about real brief is the how to increase your wealth and decrease your debt without without what I call decreasing your lifestyle and living in a sackcloth and having to have a bunch of garage sales.
Well, that's good, because we don't want to give up all those things, and we don't want to live that way. So we're going to talk.
We want lifestyle. This is America. We want lifestyle.
Absolutely, we're entitled to life. We're entitled. Period. So when we were prepping for the show, Curtis, we talked about the fact that we're going to kind of work our way through 3 focal points here. So the first key you're telling me is awareness. You're going to teach me a little bit about being aware of my money.
Yep.
And we're going to talk a little bit about being really focused on where the transfers of money are taking place.
Right.
And then we're going to talk about, once we kind of have done that, how we can actually hold on to our money and actually save it. So those sound like very important topics for most people that I know, including myself. So let's take it from the top. Awareness. What should we be aware of if we're looking to change our relationship with money?
Well, one of the main things is that, I always tell people financial literacy is the ability to read numbers. It's basically just accounting. And so most people don't even track their budget. What do you have coming in? What do you have going out? So one of the things I do with clients is I make them do that first. And I tell people it's not for me as much as it is for you, because it's an old saying, that's what gets measured gets done.
Right, because you get a snapshot then. I mean, I know it took a lot of years for me to get to that point where I was like not just winging it, from month to month, and finally actually sat down and looked at the numbers. So it gives you an ability to plan, right?
Yeah, picture's worth 1,000 words, and you can really look at the 2 financial statements that work in people's lives right now are their income statement. Like, so if I tell people, if you think of your household like you're running a business, and everybody is, they're what I call the CEO of their life. So everybody has a personal economy. And so you can't control the economy, the national economy, but you can control your production and your consumption. So you have to look at your personal profit and loss, your income and expenses. And what I always tell my clients, if you can't control that, somebody will always control you.
Right. They'll take care of it for you.
They'll take care of it for you, right? Because if you don't have a plan, you're part of somebody else's plan. Then you have your balance sheet, which are your assets, everything you own, and your liabilities, everything you owe. And knowing the difference between the two. Asset is something that puts money in your pocket. A liability is something that takes money out. So the first step is I try to get people aware of that so that we can see which the next step is, where the transfers are occurring.
And you've talked about there being 3 kinds of money that people need to be aware of. What do you mean by that?
Well, that's a good question. So 3 types of money are what we talk to people about. There's accumulated money. That's the money that you have saved. Those are your assets. Okay. The second type of money is what I call lifestyle money. So lifestyle money is the money that it takes to drive what you want to drive, live where you want to live, vacation where you want to vacation. In order to live the life that you want. That's lifestyle money.
Okay.
And the third type of money is what is called transferred money.
Okay.
And transferred money is money that you're losing unknowingly and unnecessarily. And, the interesting thing is that most traditional financial advice is geared around either accumulated money, and so you'll, a lot of times you'll sit down with somebody and they'll say, well, how much you got?
How much you got, right?
Yeah, oh, you know what? Well, we can do better. You need to move that money over here to us. All right.
Well, let's segue to that, because that's your second part, really, is that the key is to be aware of those transfers of money. Right. So let's get into those transfers, and what do you teach people to look for there?
Well, the transfers there's about 15, but let's say the top 10 are, or I'm not going to get all 10, but taxes, tax refunds, how people pay their mortgage, how people fund their qualified plans, credit cards, how people finance cars, the way they decide to buy their home, putting down big down payments. All of these things represent transfers where you're just, giving money away. And if you were aware of them and really understood how money worked, people would do things differently.
And when we were talking before, you had a great analogy of a bucket, basically, and these transfers are kind of the leaks that you aren't really necessarily paying attention to, so you're focused on accumulating that money that's coming into the bucket at the top, but every time that you've got these little transfers, somebody's kind of pulling off a little slice along the way that's creating a leak in your bucket, right?
Yeah, exactly. If you think of wealth, your wealth is in a bucket. There's 2 ways to fill the bucket up. You can turn up the volume, which is trying to get more going in. Income, trying to take more risks by, picking better stocks or whatever. Or how about let's just plug the holes? Debt, fees, finance charges, things that are just sucking money right out of your pocket because, and it is not an accident. It's by design.
Absolutely. That's right. That's how they make their money, right?
Exactly. And so everybody has focus groups trying to figure out how to separate you from your money, and most people don't spend they spend more time planning a vacation than spend planning their finances. But everybody else is studying on how to separate you from your cash. I say, look, maybe you should think about this a little bit.
That's right. You might have better vacations.
Right. You can't go on vacation without having money. So
the bankers and credit card companies, they're having better vacations than we are, and that's why we got to pay attention to this stuff, right?
Using our money to do it with.
Of course, that's excellent. Well, and that takes us to the third point, really, which is if you can learn to pay attention to these transfers, you can start plugging these things up. Maybe you can actually hold on to some of your money.
Exactly.
So talk about savings and talk about
so the thing is, so let's say, for example, the example that we give people is this. It's actually smart money management. So let's say I have a client, they're making $75,000 a year, and let's say they're saving $5,000 a year. Now, traditional advice has them focus on how can I get a better rate of return on that $5,000? That's accumulated money, right? Mm-hmm. And so, just to make $500 on that $5,000, you would have to earn 10%. Okay, right. Which would be a little bit of a challenge in this market. Yeah. And now, let's say we look at the $70,000 that's left over, and let's say we could help you restructure your debt, or You could lower your insurance costs by raising up deductibles. Or let's say I had a client says, well, they're getting $5,000 and $6,000 refunds. Well, that's your money. It says like that commercial, get your money back. Well, right. The opportune thing is that your money and right. back. That means if if you didn't give it away in the first place, you would have it. So if you adjusted your W-4 so you didn't get back such a refund, you would have money that you could save right now. And right. then what you do is you save it. Okay, because right. if you just saved out of that $70,000, 1%. So let's say you found 1% of expenses, which is $700 a year, and you added that $700 to the $5,000. That's the equivalent of earning 14%.
Right. You just did. Couldn't have had it go off in my head as more clear than what you just described, Curtis. Because so I see exactly what you're saying. So if I'd invested that $5,000 and gotten 10%, I would have gotten the 500 you were talking about. And then if I'm plugging up these leaky holes and saving that money, I'm actually making even more. And then of course, if I can do both, I'm a wealthy person, right?
And all it takes is to think a little bit differently about how you handle your finances. It starts here. It doesn't even take risk. Doesn't cost any fees.
Absolutely, and that's why I love that you refer to yourself as a financial educator more so than like a financial planner or anything like that, because a lot of times those are part of the leaky buckets there. Curtis, we can go on forever, but this is great. I mean, people need to get in touch with you and get financially educated. You just made a light bulb go off in my head about the fact that I can get a better return by plugging up holes than looking for those better, bigger return investments. So.
Absolutely.
Cool stuff. So let me tell people, let me wrap us up and then tell people how to get in touch with you. So we've been talking with Curtis May here, financial educator, about how you can actually save your own money and end up creating a bigger return than the investment side of your money, which is awesome stuff. We focused on three main things: being aware of the different types of money, zeroing in on those transfer points where often you're losing money to somebody else who's helping lift it out of your savings there and out of your pocket, and then holding on to that money, not leaking it out in the first place, and potentially getting a bigger return just from the plugged up holes than from the investments you make with the money you've been able to put aside to invest. Great stuff.
Right.
So, Curtis, I know you have a website. People can connect with you at curtismay.weebly.com.
Yes.
And when they go there, you've got a report for them, which I believe, if I can read correctly with my fuzzy eyes here, is called Why Traditional Thinking Fails to Reach Its Goal. Did I get that right?
That's correct.
I think so. And so if they go to curtismay.weebly.com, they can get that free report. You're inviting people to connect with you on LinkedIn as well, so you're going to be easy to find there. If we just search for Curtis May, connect with them there. And when you connect with them, either through getting the free report or through LinkedIn, Curtis, you've been very generous to offer to have a free consultation with people where they can look at whether they are retirement ready or not, right?
Yes. It takes about 10-15 minutes, and we can do it right over the phone or visually, kind of like we're doing here, and kind of test your temperature of where you are, and kind of get to know each other, and go from there if somebody wants to move a little bit further down the line.
So if you'd like to save some money and not have to give up your latte, get connected with Curtis May at curtismay.weebly.com. Curtis, thanks so much for being a guest on Expert Showcase.
Dr. Mark, I appreciate you having me. Have a great day.
And another great Expert Showcase episode. Chris, what should people do right now?
Yeah, if you're watching this and you're a coach or consultant, imagine what it would do for you and your business if you were a guest on Experts Showcase. And here's the best part. Other than possibly increasing your business, an appearance on Expert Showcase is free. We give you a copy of your episode so you can use as marketing collateral, and we give you a coaching session to go along with it to tell you how you can best market your episode and other tips and tricks about your business. So what you want to do is head on over to expertshowcase.com, click on the big yellow apply button, and apply to be our next featured guest on the Expert Showcase. Now, if you're a coach or consultant and you've already imagined what having your own internet talk show will do for you, then we want you to head to VideoContent.Agency and check us out, check our packages out, and get in contact with us. Let's see if we're a good fit, and let's see if we're the ones to produce you and make you the next star and have your own internet talk show. And until next time, Mark, anything else?
I couldn't have said it any better, so just do what he said.